conversation going and get in Nilesh Shah, founder Envision Capital, to talk about what's happening in the markets and the reaction that we are seeing to these massive GST cuts and regime change as well. Nilesh, good morning. Thank you so much for joining in. You know, markets have come off the highs, but of course, that's a one-day phenomenon that we are talking about. What's your take? What would this do? The GST cut that has come about, is this enough for a rally to continue going forward? What happens to macros overall? Your first take.
This surely provides tailwinds both to the economy and to the markets. Obviously, yes, this has been expected from probably the last fortnight or so, since 15th August, ever since the Prime Minister has announced it, and the markets have held up relatively quite well since then. And I think this is clearly going to be a big booster dose for both the economy as well as the markets going forward.
Nilesh, hi, morning. So, we've been talking about, there's so many beneficiaries, right? Whether it's in the auto space, in the consumption space, you've got a diagnostic company. I mean, there are lots of them. Give me your top three beneficiaries based on this, stocks which you are comfortable buying at this juncture.
I think it's still going to be the broad basket of staples, and both consumer and consumer discretionary, both are the biggest beneficiaries. I clearly believe that from all of this, it's going to be more of the consumer appliances space, which will be the biggest beneficiary, because there it does matter. I mean, a 50,000 air conditioner versus a 5 or 10 rupee biscuit pack, I think there's a very big difference in terms of the impact. So clearly, it's going to be the consumer appliances companies which are going to benefit. In addition to these cuts in the GST rates, which reduces the price points, but it also essentially, we have to keep in mind that the budget had increased the exemption limits in terms of the income tax for the middle class. So clearly, a lot of that additional saving is going to get into consumer appliances. So it's going to be clearly consumer appliances which are going to be the biggest beneficiary of this GST cut.
Consumer appliances. Nilesh, thank you for waiting by. What about the indirect beneficiaries of this? We've all spoken about consumption and automobiles and so on and so forth. But what about the indirect beneficiaries, the NBFCs, the Bajaj Finances and the Shriram Finances, the CV financiers of the likes? Does that give them an indirect benefit as well? Because for these essential items, or for items like televisions, or for tractors, or for automobiles, you would go to a Bajaj Finance or a Shriram Finance other than availing conventional banking service. Does that give them a boost as well? Or do you see this limited because of the fact that they are already priced to perfection, so there'll be limited upside for such names?
No, I clearly believe that valuations essentially follow growth, and clearly these kind of measures, policy changes, policy reforms essentially drive growth. So clearly the non-bank lenders, especially the specialized finances, they benefit quite significantly. Their growth gets lifted up. There's been some challenge in terms of both credit quality as well as credit growth. Hopefully the worst is behind us in terms of credit quality. And what was required essentially was credit growth. Clearly believe these measures will lift growth rates for the non-bank lenders. In addition to that, the retail chains become very big beneficiaries because it's essentially going to help them kind of clear out a lot of inventory. It's going to basically draw in a lot of footfalls. So some of the retail chains which are specializing in selling consumer appliances will also benefit. And lastly, in terms of the tax benefits which got announced in the budget, you're going to see the home finances also benefit. That sector has been under some pressure in the recent times, but they too will end up being disproportionate beneficiaries of a combination of all of these policy measures.
Okay. Nilesh, I wanted your take on the insurance space, because there was this big call for, making it exempt from GST, health and life insurance, and that has happened. But still, there's not that much cheer. What is your take generally? Do you think that cut would be passed on, or the inverted duty structure would actually mean higher prices or higher premiums for consumers?
I'm not sure whether it will eventually lead to higher premiums. All the way I look at it is that the consumers were willing to shell out an X amount of rupees. That included both basically the premium amount and the GST amount. With the GST being removed, it's quite likely that the entire spending, that entire X rupees of spending, will entirely go towards payment of premium, and therefore I believe that consumers and families and households are going to buy more of the insurance. So there's clearly going to be more policy cover which consumers and households will take, and that bodes good for the sector. It will help the sector to kind of drive double-digit growth for the entire sector as a whole.
So this is despite no change in premiums, you're saying there'll be an improvement in volumes?
Absolutely. I mean, clearly, I think the consumers were willing to spend X rupees for which they were getting basically a Y cover. Now they're willing to spend the same X rupees, and they will basically probably go in for Y plus cover, given that health insurance itself is now becoming such a big imperative. And clearly, the policy covers are not sufficient to take care of healthcare costs. So healthcare costs are growing, and the best way to mitigate that is to have a higher cover. With basically removal of GST, consumers will be able to allocate that same premium amount for a larger cover, which essentially I think will drive growth for for insurance companies.
Just getting back to the consumer appliances space, because that's clearly a big bet right now. You've got a Voltas, which has been struggling with market share. Havells, Whirlpool has been under pressure ever since those stake sale took place. There's Blue Star, Crompton. Your best bet, and why?
Well, we're betting more on a retail chain which sells consumer appliances in basically the eastern and the northern part of the country. So we prefer to essentially kind of bet on platforms versus betting on products. So clearly, I think a better way to kind of play the consumer appliances space and not getting bothered about which appliance or which companies or manufacturers appliance will get sold or which brand's product will get sold. We're essentially getting into more a product agnostic mode and going more for a player which essentially has got a few hundred stores in the northern and eastern parts of the country, where they're selling a whole bunch of appliances across brands. And we believe that a player like that is the best position to make the most out of the growth which is expected in the space.
Nilesh, pleasure having you as always. Thank you so much for sparing time and joining us today with your views on this big GST boost and which among those beneficiaries that you are betting on. Nilesh Shah of Envision Capital. By the way, the gains now for the markets are in less than triple digits. Now only a 90-point uptick on the index. Now at 24,800 is where we stand. So it's an almost 170-point drop from the opening highs for the index. Take a short break. Our coverage on this big GST boost continues on the other side, and we also bring you some stocks that are not doing well in today's session. Stay tuned. We'll be right back.